And I
right?
just wanted to have you react to this latest news out of Grayscale. Now they're suing the SEC. You have your own battle with the Federal Reserve. Are we going to see more of this regulation via litigation and enforcement actions?
Well, it's a good question. I did actually talk about this on Twitter. I kind of had a sense a few things were coming, and now two of them have dropped. There may be others to come as well. A lot of it gets back to a post that I put up in Newsweek today that talks about how the crypto crash was entirely foreseeable in my view. Folks like me have been warning about all the leverage for a couple of years, and I highlighted specifically the leverage related to Grayscale's GBTC that brought in a whole bunch of hedge fund money and wreaked havoc on the industry and really destroyed value. And we're seeing the remnants of that today. Now, the regulators were not innocent in that because of two things. One is that they haven't been greenlighting the good players as fast as they needed to be. And they also haven't been prosecuting the bad guys as fast as they needed to be. And I highlighted the GBTC situation where a closed-end fund structurally is going to trade either at a premium or a discount to spot. And the huge supply-demand imbalance in that situation created this huge hedge fund sure thing trade that brought in all this leverage. And then when the trade reversed and that big premium went to a discount, a lot of losses, as you were just reporting, ended up being incurred. And that was not a free market phenomenon. That was a regulatory phenomenon caused by the SEC deciding to greenlight GBTC. My gut tells me that there are some folks at the SEC who wish that had never happened, because then it took them almost 6 years to greenlight another product to compete. And therefore that premium sat out there, and a lot of mom and pop investors got hurt by the whipsaw for sure, as did the whole industry.
What do you think is the SEC's next move then? Because I mean, they could they retract their approval of the GBTC? It looks like they're not going to approve a spot Bitcoin ETF anytime soon. What's the lesson here?
Boy, I don't know. I'm not an expert on the SEC, and definitely, watching from the sidelines as an armchair observer here. But there are distortions in this market that are caused by regulatory decisions. That's the bottom line. And it was both having approved just that one vehicle. There was only one vehicle through which folks could gain exposure to Bitcoin in their brokerage accounts for almost 6 years. And it was not, I mean, the closed-end fund, it's been known for years what the issues with closed-end funds are structurally. And this was an extreme example because demand so far outstripped supply that the premium went to, at one point, far in excess of double Bitcoin's price. And that was a foreseeable event. But the big takeaway for me is that this is not a free market failure. And I kind of thought that Herbert Hoover's quote about all the leverage in the world in the 1920s being like a loose cannon on the deck of the world in a tempest-tossed era. That's exactly what all this leverage was to the crypto industry. And it ping-ponged from the GBTC trade. Once that went underwater, there were big losses. And the leveraged investors then went into the leveraged futures, where they could play contango. Once that stopped trading, they went into Three Arrows Capital, and that turned out to be a Ponzi scheme. And when it all came crashing down, which was, again, completely foreseeable, then it turns out that the lessons that a lot of us who've been around Bitcoin for a long time have been screaming as loud as we could: not your keys, not your coins. Don't leverage your Bitcoin. Leverage and Bitcoin are fundamentally incompatible. And Satoshi gifted humanity with money that is no one's liability. I think Satoshi probably would have been appalled at all the leveraged companies that tried to create leveraged IOUs to Bitcoin and created all this havoc in the secondary market. And I say good riddance to all of it.
Interesting. So Three Arrows Capital had about 6% of GBTC, as I understand it. And you believe there are others to come, so it's not over yet?
Well, it's so interesting because there are leveraged players that are still operating. And so, as I said in the Newsweek post today, the moment someone started leveraging Bitcoin, bankruptcies were inevitable. Why is that? Because there is no lender of last resort for Bitcoin. So eventually there were going to be bankruptcies. And this is why I give credit to Trace Mayer for calling Bitcoin the apex predator of finance, because there is no one who can possibly create more than 21 billion Bitcoins. And when you get a big correction, if it's an extreme enough correction, it'll take everyone down who's leveraged. And those of us who are hodling, who are self-custodying, who are adhering to the not your keys, not your coins, we're fine. And we learned, I hope, a cheap lesson. In my case, I learned that lesson when I lost money in Mt. Gox in 2014. And never again did I keep a significant amount of money once I dug in and really understood how to self-custody my Bitcoin. But that's the lesson that I hope folks do take away. And so I don't know the answer to your question. No one knows definitively if there
but
are
it sounds
more
like
losses
you
coming
blame
in
the
the short
regulators
term.
for not being more on top of this.
In part, absolutely. And I blame individuals. Of course, every person is responsible for their own decisions too. So as I laid out in the Newsweek post, there are a lot of parties at fault here. And boy, do I wish the lessons had been heeded, because it's not as though a number of us weren't warning that the moment that Bitcoin started being leveraged or rehypothecated or financialized with debt, that bankruptcies were inevitable. It was just a question of when. And as you continue to see companies that are leveraging Bitcoin today, that tells you it's not over yet. That doesn't mean that in the short term, it might not be over. It very well could be, but we don't know. And one of the other interesting things is all this leverage. There was a great tweet that Michael Burry put out yesterday about complex systems. They don't fail linearly. And I think that really describes what happened to our secondary markets in Bitcoin. It was nonlinear. We didn't get the blow off top in this past bull market, and we're getting an even bigger correction on the downside. So it's an asymmetric situation that has destroyed wealth. It has destroyed value. And again, I think I'd rather, for the long-term health of this, see it all go away, and we rebuild it based upon a non-leveraged business model, which is a healthy and sustainable, solvent business model for the long term.
Right. Well, we're seeing how interconnected crypto really is, and the fallout from that. So just going back to Grayscale and their lawsuit against the SEC, now they're going to the courts. Do you think the courts might be more forgiving to Grayscale in obtaining an spot Bitcoin ETF to crypto companies in general? We are seeing this $1.7 billion fraud, this bear market. It doesn't seem to be looking good right now for crypto companies.
Well, I don't know. I'm not an expert in the facts of their situation. I do know that when a regulator is not adhering to the letter of the law, that the remedy is to go to the courts. And so will Grayscale prevail? I don't have a prediction on that. It got to the point where there have been so many rejections. And again, the rejections can't be looked at in a vacuum. The rejections have to be looked at in the face of the fact that the SEC did let one closed-end fund through and then rejected everything for years. And now there are a couple of competing products. I believe Valkyrie had their product approved in January 2021, which is part of the reason why the premium started coming down. But again, that's not a market failure. That's a regulatory decision. And so there's been a lot of discussion among some folks that I really respect on Twitter about, go read the 86-page analysis that the SEC put out, and they're right. The key is, though, that decision can't be looked at in a vacuum. It has to be looked at in the context of, there is already something out there, one and only one fund for 6 years that allowed people to get access to Bitcoin in their brokerage accounts, and that wreaked havoc. And so all of these decisions by the SEC, unfortunately, have to be looked at through that lens of the havoc that was wreaked by that very first decision to approve the Grayscale trust in the first place back in, I think, 2015.